financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly. So glad that you're joining us all around the world on the web at ftmdaily.com. That's where you can find us online. Each and every day, we provide our chart of the day completely free if you sign up with free registration. You can also find us on Facebook. That's facebook.com/FTM Daily. You can also find our YouTube page at youtube.com/FTM Daily. So we're all over the place out there. Oh, we just got back from the Orlando Prophecy Summit, and friends, we had a great time. In fact, many of you who were in the area were able to come out and visit with us at our table, able to hear some of the speeches that we delivered. A lot of great information that was delivered there at that Orlando Prophecy Summit put on by Prophecy in the News. I want to thank them for their gracious hosting of us and our team as we came in to the Orlando area. Real class act, Prophecy in the News. So great to be a part of that conference. And we are going to be doing many more things coming up in the remainder of the year. We'll keep you posted as we do. We want to get into several things today. Today's kind of a hodgepodge. We're going to take a look at a few stories. One is that Google is now choosing to change the way that it is ranking websites. You know, many of you who are trying to, get your web page on the front page of Google, it's all about the links. How many links do you have? We're going to talk a little bit about that and how Google is actually beginning to change the rules of the game on how people actually make it to the front page of Google. So a new story about that. The military-industrial complex. Life is good for those folks. We'll talk about the latest shocking story. I guess it shouldn't be shocking to many people who listen to this program, but about how Saudi Arabia is now the world's top arms importer. So we'll talk about that as well. We're also going to discuss the waning influence that America has over Russia, and we'll also talk about the brand new iWatch. So there's lots of things to talk about. We'll also be joined by Tom Cloud with a precious metals market update. And we'll also check in with John Burrs. You haven't heard from him in a while. In fact, John is part of our Christian Financial Advisor Network. He's been helping people with retirement now for nearly 30 years. He joined me at the Orlando Prophecy Conference. We'll have him on the line in a little bit from a segment that we pre-recorded when we were on the road. So all that and more lies straight ahead. Friends, you have found the only radio broadcast dedicated to bringing you more truth packed into 1 hour the mainstream media brings you all week long. This is Follow the Money Weekly. The best hour in radio begins right now. Well, all of you science buffs might be interested in knowing that the Large Hadron Collider out at CERN, which is managed by the European Organization for Nuclear Research, is going to be restarting the major collider for its second 3-year run starting this month in March of 2015. I just recently got news about this. I've been watching this now for some time. They're in search of this God particle. It's also known as the Higgs boson subatomic particle. And this Large Hadron Collider has been responsible now for trying to capture what they call this elusive God particle. And just so you know, when they restart this collider in Geneva, they're actually going to be restarting it at twice the power that they had run it in the first round. And there were many complaints, in fact, conspiracy theories that surrounded CERN, which may or may not be founded, but there were concerns whenever this thing was started the first time that many different earthquakes broke out around the world. Anytime you're messing with this kind of stuff at this subatomic level, it does get a bit bizarre. There was a story that came out earlier in the month on the BBC regarding this Large Hadron Collider restart that physicists were ready to break physics. That is, they are really trying to figure out what's at the root of our universe, and they are becoming aggressive with this of course, is a Large Hadron Collider. So anyway, science buffs will be interested in knowing that. We'll have a link to that on the show notes today. But a pretty big story that was released a couple of weeks ago about Google wanting to rank websites based upon facts, not links. This is really a big story for those of you who are involved in search engine optimization, those of you who are involved in internet marketing. Maybe you're promoting a product or a service online. You know that Google really changed the face of search engines because when they came along, I remember this back in the late 90s. When they came along in 1998, they really shook up the search engine marketplace because up until that time, search engines were really pretty rudimentary in their way that they would calculate determine, which website would be on top. And typically, it was based upon the number of keywords on the page. So back in the late 90s, let's assume that I had a coffee house in San Francisco that I was trying to promote. Well, basically, I would want to have the word coffee house and San Francisco on my page as many times as possible. And these rudimentary search engines back in the 90s would basically say, okay, who has the most number of phrases such as coffee house and San Francisco on their page? They become the most relevant. Of course, this was prone to all kinds of manipulation, where I remember many people back in the 90s were actually placing white words on white background. So you could put, thousands and thousands of these same keywords all on your page. No one would actually see them, but the search engines would, and then they would give you a better ranking because of it. Well, in 1998, Google came along. Two individuals who were Stanford PhD candidates got together and created Google. And Google was created to, in essence, be very much like the academic world. In the academic world of publishing, you'll typically find that a paper or somebody who publishes a scientific paper or an academic paper will want to reference other papers that influence them in their research. And in the world of academia, one of the greatest honors you can give someone is to cite their paper or to reference their paper in your own work. And this is how Google really got started. In 1998, they said, let's make search engines the same way. Let's basically say it doesn't matter how many times you have that keyword on your page. We're not going to count the number of times, for example, you have coffee house in San Francisco on the page and then determine which one goes to the top. Instead, we're going to also base it upon how many other websites that have authority link to you. And this became a new way of looking at search engines. Well, many search engine optimization professionals and many of the people who focus on internet marketing now have tried to get links on other websites because that's how Google determines a website's authority, is how many links do you have coming in from other sites and what are the quality of those links that are coming in. For example, if you have a website and then you have a link coming into your website, say from CNN, that's a much more authoritative link in Google's eyes than if you have it coming in from Billy Bob's blog, who may not have very many readers at all. So the point is that the more authoritative the source that links to you, the better your chances of moving up the search engine rankings. Well, here's a story from the New Scientist entitled "Google Wants to Rank Websites Based on Facts, Not Links." Kind of shaking up the SEO world. I'll read you a little part of this. The internet is stuffed with garbage. Anti-vaccination websites make the front page of Google, and fact-free news stories spread like wildfire. Google has devised a fix. Rank websites according to their truthfulness. Already starting to think here of how they can really begin to clamp down on things that they don't consider true. Let's continue. Google's search engine currently uses the number of incoming links to a web page as a proxy for quality, determining where it appears in search results. So pages that many other sites link to are ranked higher. This system has brought us the search engine as we know it today, but the downside is that websites full of misinformation can rise up the rankings if enough people link to them. A Google research team is adapting that model to measure the trustworthiness of a page rather than its reputation across the web. Instead of counting incoming links, the system, which is not yet live, counts the number of incorrect facts within a page. A source that has few false facts is considered to be trustworthy, says the team. The score that they compute for each page is known as its knowledge-based trust score. The software works by tapping into the Knowledge Vault, a vast store of facts that Google has pulled off of the internet. Facts the web unanimously agrees are considered a reasonable proxy for truth. Web pages that contain contradictory information are bumped down the rankings. So there is some good and some bad to this. I will admit that in the world of economics, I'm constantly confronted with bogus stories that many people believe to be true. And they come typically from these real wild conspiracy type of sites. And oftentimes they're not based in any kind of reality. They're based upon hyper opinion or even sometimes they're sales pitches disguised as a blog. And this is, in some ways, I can see the benefit of this, but I got to tell you, it's dangerous when you have somebody like Google who has so much power to be able to determine, what they consider to be true and what they do not consider to be true. Let me give you an example. Many of you have read my petrodollar article series on our website, ftmdaily.com/petrodollar. Now, that is a well-researched article that has lots of links and authoritative links, coming into it and as well going out from it. But if Google decides that they don't like the idea of the petrodollar, and because it's not in the mainstream press, and because CNN doesn't talk about it, and because they can't find a lot of mainstream outlets talking about the petrodollar system, they may choose to ding that with a low knowledge-based trust score. And obviously, much of this is stemming from the fact that we are seeing this rise of anti-vaccine stories that are coming out. Of course, many websites are, suggesting that children maybe shouldn't have vaccines as early as they do, or maybe they shouldn't receive as many. Some people are saying they shouldn't receive any at all. And the major corporations are obviously fearing the power of the internet. And so this, to me, looks like a pretty big power grab by Google, being able to determine what they deem to be true and what they do not deem to be true. Again, I can see both sides of this argument. It certainly is good to keep some of the junk that's very obviously false and bogus away from, the top of the search engine. But at the same time, if Google is going to be the ultimate authority to decide what's truthful and what's not, then they have a lot of power, and that, of course, can be manipulated. So it is a concern. We'll have a link to this story. Google wants to rank websites based on facts, not links. I'm curious what you think, especially those of you in our audience who are search engine optimization pros, or maybe you're in internet marketing. Did you know about this story? And also, what do you think about it? You can always shoot me an email at info@ftmdaily.com. I'd love to hear your comments. Mentioned earlier that at the top of the broadcast that life is good for the military-industrial complex. Total global military spending has risen for 6 consecutive years. Last year, a total $64.4 billion was spent globally on defense imports, up sharply from $56 billion in 2013. Now, over the last several weeks, we've been seeing this Netanyahu, GOP, Fox News machine actively targeting Iran. Iran is being accused of wanting nuclear weapons because they want to wipe out Israel. Of course, this has been a very controversial topic. People on both sides, some saying, Iran obviously hasn't invaded anybody in a very long time. And the fact that they would want nuclear weapons to strike Israel, the question becomes, Israel itself has 200 nuclear weapons. So, couldn't Israel defend herself from Iran if she needed to? On the other side, you have people who say Iran is a very bad regime, and of course they need to be clamped down, and they need to be prevented from actually obtaining a nuclear weapon. But as I mentioned, while the Netanyahu GOP Fox News machine completely targets Iran, Saudi Arabia is in the background quietly amassing a deadly military arsenal. Now, I am no friend of the Saudi Arabian regime. Last year, Saudi Arabia's defense spending surged 54% to $6.5 billion, surpassing India, listen to this, surpassing India as the world's largest importer of military equipment last year. This year, 2015, 1 out of every $7 that will be spent on global armaments will come from Saudi Arabia. Isn't that astonishing? Saudi Arabia is the world's largest arms importer, surpassing now India. And consider this, as of last year, Saudi Arabia and the United Arab Emirates, the UAE, spent a total of $8.7 billion on defense, a combined $8.7 billion, which is more than Western Europe spent on defense imports combined. So the entire area of Western Europe spent less than Saudi Arabia and the UAE spent combined over the course of the last year. As of last year, the top arms importer was Saudi Arabia, followed by, and I got a list here, followed by India, number 2, Number 3 was China, so these are not really surprises. Number 4 was the United Arab Emirates. And then number 5, Taiwan. Number 6, Australia. Number 7, South Korea. Number 8, Indonesia. Number 9, Turkey, interestingly enough, and we've been watching Turkey now for some time. And number 10, Pakistan. Now, who are selling all these weapons, right? These are the people who are buying all of the weapons. Who are selling the weapons? Well, here's the top 10 arms exporters for last year. Number 10 was Canada. Number 9, Spain. Number 8, China. Number 7, Israel. Number 6, Italy. Number 5, Germany. Number 4, the UK. And then finally, the top 3. Number 3 was France. Number 2, Russia. And, of course, number 1, the good old red, white, and blue, the United States. The U.S. enjoys handsome profits from selling deadly weapons and defense equipment to the Middle East region. All told, the U.S. shipped over $8 billion of armaments to the Middle East in 2014, up from $6 billion in 2013. And so the U.S. continues to dominate the global arms trade. We're supplying about 1/3 of all of the global arms exports every single year. Last year, we provided about 33%. So that makes America's top trading defense partner in 2015 Saudi Arabia, if you can believe it. It's really something. The United States now selling more arms to Saudi Arabia this year than ever before. All of this from the IHS Global Defense Trade Report. We have a link to that on our show notes today. It's just really sad when you think about how the entire world seems, especially the West, seems fixated upon Iran. No debate, no qualms. I don't want Iran having nuclear weapons, but I also don't want Saudi Arabia having nuclear weapons. In many ways, Saudi Arabia, as I've told you over and over on this program, are the ones who are funding ISIS. I mean, we have proof of this. Qatar is funding ISIS. UAE, I mean, these allies, quote unquote, of the United States are in many ways not really our allies. In fact, they're using our relationship right now to build a vast, deadly military arsenal while they have us focused upon other nations within the region, such as Iran. So I would suggest to you that those of you who are fixated upon Iran need to watch your backside with Saudi Arabia. They're the ones who are quietly amassing a tremendous amount of arms. They're the ones, by the way, where if you're in the country and you're carrying a Bible and you're caught with it, you can be executed, right? And these are our allies. This is the country where women can't drive. This is the country that wants nuclear weapons and is on record saying that they want the destruction of Israel. And yet they're our ally. Why is that? Because they take dollars for their oil. Friends, it's all money. That's why we call this podcast Follow the Money. It's all about the money. Isn't that terrible? Isn't that jaded when you think about that? It may seem so, but the truth of the matter is that if you want the truth, you have to follow the money. And that's exactly what we see. When the Saudis stop taking the U.S. dollar for their oil, we will see the U.S. turn on them as well. We'll begin to finally see negative stories about Saudi Arabia in our press. We really don't see too many. We saw some with this blogger. Many people became critical of the blogger that's been, sentenced to 1,000 lashes in Saudi Arabia. They've even talked about giving him the death penalty now. But the Saudis have not backed down. And we've documented on this program over and over again how the U.S. has just bent over backwards for the Saudis, despite the fact that the Saudis have more in common with ISIS than they do with the West. So just another stunning story. It probably shouldn't be stunning, but the Saudi Arabians are stockpiling weapons. You need to be very cognizant of this story because the mainstream press is not going to tell you much about this. They're going to keep you focused on Iran. Meanwhile, Saudi Arabia is the one who's stocking up on weapons. Another story that came out from the Washington Post, interesting story. This is something to also keep your eyes on. America's influence in Russia is losing its grip. It seems the nonstop anti-Western propaganda that's being spewed by Moscow across its state-controlled media outlets has been extremely effective. We haven't seen since the Stalin era Russians having a lower view of their American counterparts. It's been a long time. Here's a quote from the Washington Post. More than 80% of Russians now hold negative views of the United States. 80%, or more than 80%. According to the independent Levada Center, a number that has more than doubled over the past year. And that is by far the highest negative rating since the center began tracking those views back in 1988. So while the West has been spewing its own propaganda against Russia, here, of course, we have a low view of Russia as well. We aren't talking about those numbers, but we're talking about the numbers in Russia and their viewpoint of Americans. And we're seeing that double now, the negative rating doubling over the last year to over 80% of Russians who do not hold a favorable view of the United States. The story goes on and discusses the general attitude towards the European Union by Russians, finding that 71% of the country holds a negative view towards the EU, with a full 36% of Russians now believing that it is in the country's best interest to distance itself from the West. We'll have links to this story in the charts on our website for our show notes. But again, another trend that does not seem to be slowing, that we haven't seen this kind of animosity between the Russians and Americans and the West in general since the era of Stalin, since the Soviet Union. We haven't seen this. And so it is very, very negative what's happening and what's developing now between NATO and Russia. We're keeping our eyes on that story. And finally, I want to talk about this new Apple iWatch before we bring Tom Cloud on. You may remember from Tom's segment last week, he had mentioned that gold iWatches were going to be coming out. Of course, the reports were suggesting that these would cost upwards of $10,000, having around 2 troy ounces of gold within them. And if this were true, according to the story last week, this would mean that Apple would be requiring or using approximately 30% of the world's gold supply on an annual basis just to meet the demand for these gold iWatches. Well, this week we actually got pictures of this gold iWatch, and indeed the price tag on these are around $10,000. I've even seen some upwards of $12,000, and they contain 18 karat gold, so they're in essence jewelry. It appears that the Apple iWatch is going to be both a utility for some, because they'll cost as low as $350, $395, somewhere in there in the low range, all the way up to a luxury item, competing with luxury watches like Rolex at the $10,000 and $12,000 level with solid gold. There's several comments on this story. First of all, with the iWatch, it's very interesting to me that people are going to be putting these on their arms because they're small. And, over the years, we have all kind of moved and progressed from desktop computers to laptops to tablets, and then, of course, to smartphones. And I got to be honest, I don't feel real comfortable on a smartphone. I just don't. I don't like doing a lot of things on a smartphone. Maybe it's because of my eyes. I mean, I have decent vision, but it's so small. And I have a difficult time doing things and accomplishing things on a smartphone. I really prefer my tablet. And so if I need to do, productive things, research, whatever the case might be, I prefer to use a tablet. But many people prefer their smartphones. And now we're talking about iWatches, which are very small. If you've seen these, they go on your wrist, and they're able to do many different tasks. And I've been trying to drill down in this story because I am long on Apple. I like Apple stock, been long on it now for some time. And I wanted to get behind what is behind this iWatch. What's driving the demand? And here's one thing about Apple you've got to be careful of. You cannot assume that people are not going to buy this just because it may not make sense to you. Apple told the world that they needed a MacBook, and people didn't know they did until they finally got one, and then they realized they had to have it. People who are Apple users many times are diehard. And then, of course, they came out with the iPhone. And the iPhone, nobody knew that they needed one of these until it came out. And then once people tried it, they said, oh my gosh, this is amazing. And so people then suddenly realized they needed one. And I use that word loosely because we all know that nobody needs many of these luxury items, but that's the role of the corporation. They need to teach us that we need them, and that's how they stay in business. Their whole goal, the whole point of marketing is to craft needs and wants and help people understand what they need or what they perceive to need in the marketplace. And then, of course, they came out with the iPad. And I remember when the iPad first came out, I thought, who would use that? I mean, I'm happy to use my desktop. I'm happy to use my laptop. I can't imagine using a tablet. Can't imagine I would need that until I tried it, right? And then, of course, I had a tablet in my hand and I was using it thinking, this is pretty neat. And I began to use it. And, of course, now I can't even imagine, life without an iPad. So this is what Apple is good at. They're good at teaching us what we need or showing us things that we need. So I know that they have poured, millions and millions, if not, hundreds of millions into research and maybe even billions into determining how to best sell this smartwatch and what the trigger points are for people to buy it. And from what I have been able to gather, I watched the Tim Cook announcement of this new iWatch this week where he revealed it. And here's my basic takeaway. It looks as if the iWatch is going to serve a number of purposes. A, it's going to be great for people who exercise. There's a lot of people who exercise, pedometers that they can have on their watch. It'll keep up with their heart rate. There'll be all kinds of health-related apps that I think we'll probably see doctors even encouraging people to use the iWatch for those purposes. Additionally, many people, use their phone for much of this kind of technology, maybe texting or maybe, making phone calls. Well, now you'll have that ability on your watch, and you may say, well, that just doesn't make sense. Well, the truth of the matter is that it may be more convenient to do that from your wrist. Now, the other thing that I have seen, and this is a bit alarming to me, is the recent release of Apple Pay. Apple Pay, of course, is a new payment system that Apple is using to collect money in the payment processing world. It's a huge, vast world that Apple feels like it needs to tap. And they want to provide a more secure platform for retailers to be able to take payments through Apple Pay. And now with the new iWatch, when you have your iWatch on, you will now be able to go into stores and retailers who take Apple Pay, and you'll be able to wave your wrist in front of the infrared light and pay with your wrist. Now, this is getting a little bizarre because I believe that in the future that we're going to see embeddable chips, and I know we're already seeing this now, but I believe we're going to see embeddable chips where people will be able to pay with their hands. And so what Apple is doing here, I believe, and they're probably one of the best companies to do this, is they are beginning to condition the world to begin paying for things with their wrists with this iWatch. It's going to make it very normal for people. It won't be bizarre at all. The next step is to take what's in that watch and just move it right into your hand. And then you don't even, and they've already talked about this. They've already talked about all of these embeddable type of technologies that they're going after. So this iWatch is more than meets the eye here. This is a strategic move. I believe this is going to be a successful launch, even though I can't imagine myself buying one. That is until I try it, right? Then I got to have it. Well, hopefully not. But back to the gold in the iWatch. This may be conspiracy theory thinking on my part, but I have to tell you this because I find this fascinating. The fact that Apple may be producing a tremendous amount of these gold iWatches is interesting because they're going to have to buy a lot of gold. And what better cover for a corporation that is sitting on massive amounts of US dollars to have to diversify some of those dollars into gold in the name of quote unquote inventory. If Apple were to go out and take those dollars and buy gold with it the way China is doing or the way central banks are doing now, they would really freak out the gold market, and it would drive the price up dramatically if they thought corporations were actually taking some of their cash piles and throwing it into gold. But with this particular strategy, where it's inventory because they have to have it, this is a very interesting way for Apple to diversify some of its dollars into gold without freaking out the gold market and tipping it off to the fact that they're holding gold for that purpose. I'm not saying that's what's happening here, but just from a conspiratorial kind of view, yeah, that's possible. That is possible. That could be part of the plan here for Apple, is to diversify away from some of those dollars and get some gold in its portfolio and call it inventory. Now, who, by the way, are going to buy these iWatches made of gold? Well, some of the 1% here in the United States probably will, and some people who probably don't have any business buying those kinds of things will probably do the same thing here in America. But the majority of Americans are going to buy the cheap plastic coming out of China. The truth of the matter is that Apple, I believe, has been very, very smart because they know that they have a tremendous demand for their products in China. And China is very pro-gold. Even the government itself tells the people to buy gold with their savings. And so it's not a stretch to imagine that many Chinese will be viewing these gold Apple watches as a great purchase for them, because many of them like to buy jewelry that's made of gold. In fact, 54% of the demand for gold is composed of jewelry. I mean, it's a tremendous amount of demand for gold jewelry, especially in China and India. And Apple has a lot of Chinese customers, so this is a very smart move. I don't expect to see a ton of these gold iWatches moved here in the U.S. compared to what we'll see, relatively speaking, in China. But all around, Apple, I think, is making some very interesting moves here, something to keep your eye on. And so with all that being said, let's head over now and get an update on gold and silver.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Price of gold and silver dropping over the weekend. We've seen ECB bond buying accelerate as Europe is in a fix, and what has been going on for the past several months is we have seen U.S. Treasuries being bought, taking the pressure off of interest rates, and then all of a sudden we're now seeing those U.S. bonds being sold, and we feel we're near the top of the U.S. dollar. But let me go back to the ECB buying bonds. they've gotten the same situation that we were in for the years we were doing the quantitative easing. Their bonds are not being bought by their citizens or investors from around the world, so they're having to print and buy their own bonds, which is pushing the dollar even further artificially high on the short term. So that's just pushing gold and silver down in dollars, while gold and silver are going up in euros. So anybody in Europe is selling off their dollars, just like we did for 12 years. And that's a good thing long term, but certainly if you watch it in dollars, it looks like you're actually losing, quote, money, which is hard to explain, but I can assure you it's good that the Europeans are buying gold and taking it off the market because they're very strong hands. The other thing I wanted to mention is the data last week from the U.S. coming out and saying unemployment now is down to 5.5%. As we've talked about many times, if you make any decision based on government figures, I guarantee you, you will get slaughtered, your investment will, in the end. All you got to do is subscribe to Shadow Stats by John Williams and see what the real inflation rate is, see what the real unemployment rate is, see what real job creation is, and not these fake numbers that the government's putting out. I mean, they're completely fake numbers. They have nothing to do with anything except trying to control markets and make you think things are better than they really are. And John Williams is not that expensive, but if you got any kind of money you're investing, you need to get into that and know what the real statistics are, or you're going to end up getting hurt, just like in 2008, and it's taken 7 years for the stock market to get back even. So you don't want to do that again. So you're going to watch that. The other thing I want to bring to your attention is the selling of U.S. Treasuries. It's now 3 straight months, Russia, China, and Japan, the 3 biggest holders that hold trillions of dollars, like $3 trillion of our debt, have sold off and had a net after buying those bonds. They're now selling them off, which leads many people to believe we're closer to a gold-backed currency in Russia and China combining to have a gold-backed currency. So we follow that very closely. It's a very important thing that many people don't talk about. But if we keep seeing Russia, but more in particular China and Japan, selling off our debt, it's going to be very scary when that bond market tops out. And I think it will be sometime this year. I'm on record as saying that I think the bond market will turn down after a 30-year bull market later in the year, and gold will be the biggest benefactor. His money will rotate to gold as big money managers move back to a bigger percentage or their first percentage into gold. The other thing I want to follow up on is I've had calls about my talk in Illinois, and the ones that have bought the DVD from compass.org is we have a correlation between the debt ceiling being raised and the price of gold. It's a 93.7% correlation over, since 1971, gold tracks the increase of the debt ceiling in the U.S. The last year and a half it hasn't, because there hasn't been an argument forefront in front of the people. So Obama's been able to raise the debt ceiling over $1.3 trillion without any attention being brought to it. Well, that expires on next week, on the 15th of March. And if the Republicans will get in and bring it a central point of us just printing money out of thin air, run it up, you're going to have a correlation back. Right now, gold should be at 1780 and not 1180, based on the 93% correlation between gold and the rising debt since 1971. People, it's not going to stay there. Gold is a bargain. Can gold go a little bit lower? Maybe. I don't know. But it doesn't make any difference. You're going to be wishing you had gold in there when it moves. You'd rather be a few days, a few weeks, or a few months early than a few days late when this thing moves, because the premiums are going to jump, the price is going to jump, and hopefully the Republicans will be make this a major focal for the future of this country and raising this debt limit and just keep printing money and keep doing trillion-dollar deficits like everything is happy again. So this is something that I've gone into detail on my speech. And once again, you can buy it. It's very inexpensive by going to Compass, COMPASS.org, O-R-G, and order that DVD. It's important for anybody that's got money invested. Silver is back below $16. Once again, a gift. We still think it'll move back above mining costs by the end of June. So we're still looking at a 15 to 20% jump. So you need to just keep buying it. It's a gift to have silver down at this level. So while I don't have great news on the price movement, it's a great opportunity to add to your portfolio, or if you haven't invested in gold and silver yet, to get started. Palladium continues to be pretty flat, but has made this big move back up as the quantitative easing started in Japan and has protected the car industry, so that looks good. Platinum continues to look the weakest of the four metals, both technically and from a fundamental standpoint. If any of you need to reach me and talk to me, you can reach me at 800-247-2812. That's 800-247-2812. And if you don't have a precious metals IRA and want to have physical gold, silver, platinum, and or palladium in your portfolio, you can call us and we'll walk you through how to set up a self-directed precious metals IRA to own physical gold and silver. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
Follow the Money. We'll return.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
The stock market can be a scary place, especially when volatility strikes. The best investors know that the only way to avoid losing their nest eggs in the next stock market collapse requires a system. Here at FTM Daily, we have created such a system, known simply as the Market Barometer. Our exclusive stock market indicator system warned investors just prior to the massive stock market crash of 2008, saving them thousands of dollars in potential market losses. Later, it issued a buy signal in 2009, allowing smart investors to get back into the market as prices marched higher. If you have money in the stock market, you need a time-tested system to help you avoid the worst downturns and alert you to the best upturns. The Market Barometer, created by Christian economist Jerry Robinson, is a simple red, yellow, and green light system. Anytime the stock market trend changes, you'll receive a simple alert by email. And when you subscribe, you will also receive instant login access to view our alert archives, as well as other special investing resources, including exclusive videos with veteran investor Jerry Robinson. Don't let the next market collapse catch you off guard. Get 1 year of access to our powerful Market Barometer system for only $49. Get more details and lock in this special low price today at marketbarometer.org. That's www.marketbarometer.org.
Retirement today isn't just the end of your daily commute, it's the beginning of your second act. What's the key to a happy retirement? The answer to that question depends on you. For some people we talk to, that means sailing around the world, or maybe moving to Costa Rica, or even starting a second career, skydiving. These happy retirees all have one thing in common: planning. They saved enough to live comfortably and pursue their retirement dreams. But get this, most Americans spend more time planning their vacations than planning their retirement. So where to start? Know your magic number, how much money you'll need for retirement. Here's Fidelity's rule of thumb. You need at least 8 times your ending salary for a 25-year retirement. So let's say you're making $60,000 a year when you're 67. You need nearly $500,000 to retire. Start small. Aim to save 1 time your salary by age 35 and then go from there. An easy trick to start building that portfolio, Fidelity recommends saving 1% more than you do right now. You probably won't miss it, and it really adds up. Let's go back to that $60,000 salary. If you save an extra 1%, that's $50 a month. That can translate into an extra $270 a month in retirement. So whatever your retirement dreams, start working on a roadmap to retire your way.
I woke up this morning, get around for my shoes. Everybody got this, whoa, walking to the world. Up this morning, get around for my shoes.
All right, friends, welcome back to the program. So glad that you're joining us. Well, you know, many of you know that I just got back from the Orlando Prophecy Summit that was held in Orlando, Florida by Prophecy in the News. We had a blast. Met so many people who are listeners and subscribers and readers of our website. Had a chance to meet them in the flesh one-on-one. We met a lot of great people. And, of course, gave several speeches while I was there and had a chance to meet many of the other speakers. It was just a great time. And, in fact, I was joined by our good friend and the founding member of our Christian Financial Advisor Network, John Burrs. Many of you may remember him from the times that he has been on our program before in the past with the Retirement Minute segment. John is joining me on the line. Hey, John.
Hi, how are you today?
In the interest of full disclosure, we should let people know that we are actually recording this on the road. That's why the sound quality may sound a bit degraded, but I do want to apologize for that. But, John, you were with me at the conference. We had a great time. You were at my table answering questions that people had about the current, state of the economy. Of course, you've been helping people with their finances for almost 30 years. What was your impression of the conference? What did you think?
Oh, I thought the conference was just wonderful. I really enjoyed it. Some of the people that I've just listened to for a long time, actually getting to meet them in the flesh was really neat. Jonathan Kahn was there talking. He was kind of the main event for the Friday night session. And, boy, I tell you what a reception he got. And some other people like Bill Salas and, just people that you probably have listened to for a while. Finally getting to meet them was really neat, but really enjoyed it. And I'll tell you, Jerry, even the 2 main sessions you had, and I know you had a couple breakout sessions, but, it was fun to watch people after they came out of listening to what you had to say with all the questions that they had, all the excitement that they had, because, one of the things that sometimes when we go to these kind of conferences, we hear the alarm, we hear the alerts, but we don't always get solutions. And,
so true.
you are kind of the breath of fresh air there, giving some solutions. So it was exciting.
Yeah, it really was. We heard so many questions at the table as people came up. It really gave us a pretty good glimpse of what people are concerned about. And I remember many people coming up and specifically asking, where do I put my money? What do I do in this current state of the economy? And it was wonderful to provide solutions there at the table. We were able to provide some good guidance to people, to provide them with just some basic understanding and some basic wisdom to help them on their way to financial success. John, you had a chance, you had mentioned Bill Salas. In fact, he's going to be on the program in the next week or so. I'm going to be getting him on to talk about his new book. It was fascinating to hear all of the different speeches and all of the different perspectives that were at that conference.
Well, one of the neat things I think that I came away with was, I've read a lot of Bill's material, and I kind of understand his Psalms 83 and some of the, what his philosophy is with that. But I'll tell you what was real exciting is in your last session when you came out with those slides about Greater Israel. And, boy, I wish everybody listening to this would have had a chance just to be able to have seen those slides and get an understanding of what Greater Israel is in God's eyes, what the land is, compared to what most people perceive Israel to be. And, it really kind of went back and forth neat with Bill's Psalms 83 and those kind of things. So it was what a connection, great connection.
Yeah, we had a tremendous response from that. People were very interested in that, and that's interesting because we are in the process of putting together a little ebook that's going to be available on Greater Israel. And for those of you who don't know what John is talking about, don't worry, because we will be making that available soon. But in essence, in the book of Genesis, chapter 15, the Bible tells us what the actual borders of Israel are. And it's a very interesting study, and it does have all kinds of geopolitical and economic ramifications, and we'll be talking about those soon. John, one of the things that I was impressed with was the number of people who came to our table looking distraught, and yet actually had a chance to sit down and talk with you about perhaps, a retirement plan that they had. They were trying to figure out how to gain better access to gold and silver, perhaps in their IRA. Many of them were looking for strategies to weather what they view as a potential coming storm. And you were so gracious to spend so much time with many of these people. And so many of them walked away, I believe, with great wisdom. And I was very blessed by that. Of course, many people don't realize this, but you're available not just at the conference, but you're available through our Christian Financial Advisor Network. I know there's many people out there that really could use some sound wisdom right now, specifically, not just general wisdom, but specific wisdom for their particular financial situation. And John, maybe you can share just real briefly in conclusion some of the questions you received, or maybe one of the most common questions that you received.
Yeah, one of the most common questions, obviously, is people are worried right now. And because of all the things they're hearing and seeing in the news every day. And so it's always, well, how can I protect what I have? And what happens if the dollar dies? We've heard that many times. And people sometimes aren't understanding that a stock market crash and the death of the dollar is not the same event. It's two different events. And so at the conference, it was wonderful because we got to spend time just talking with people, getting to know who they are. And most of those people that we talked to wanted us to be able to call and talk with them individually about their situation, which is, as you know, Jerry, real hard to do at a conference. So we're going to take some one-on-one time once we get back and call those folks, and we'll just start setting up time where we can review their situation individually and what steps they need to take. So that's kind of what happened at the table, and it seemed like it was a constant flow of people with the same question.
Yeah, it was wonderful to have you there. I appreciate your help. We also want to give a shout-out to Alan and Betty, who are listeners and to our program and, of course, readers of the book, and they were able to join us and help us at our table, so I want to give a shout-out to them and thank them so much for their help. It was a wonderful, wonderful weekend. And, John, I tell you, so many of these people who are going to be receiving a phone call from you are, they're in really great shape here because now they don't have to stress. They don't have to worry. They can actually try to put together some sort of plan. And maybe it doesn't even get that far. Maybe it's just a question that they have that they need answered. Friends, you can always contact us at our Christian Financial Advisor Network. It's completely free. It's a completely free service we made available to all of our listeners and our readers. You can simply call 800-609-5530, and we'll put you in touch with John or someone like John who can answer your questions free of charge and help you get started on the path to financial freedom. Hey, John, I know we're both on the road, so I won't keep you. Thanks so much for the update from your perspective on the conference, and I wish you a great week.
Well, thank you. I enjoyed it thoroughly, and it was fun to get to see you again. So hopefully we're going to be talking to a lot of people here in the coming weeks and just be able to, I think the big thing is to be able to have you continue to share the message. What a wonderful job you did. Again, I'm glad we got to meet up down there for it.
Yeah, it's always a pleasure, John. Take care.
Hi friends, Jerry Robinson here. I want to tell you about our Christian Financial Advisor Network. The Christian Financial Advisor Network, or CFAN, is a network of faith-based financial planners that I created back in 2010. I personally select each of the advisors within the network, and we now have advisors covering 45 states. So whether you are needing help preparing for retirement or are just wanting the most competitive prices on life insurance, we have a faith-based advisor who can help you. Each of our faith-based advisors sponsors agree fully with the FTM Daily philosophy and our own 5 levels of financial freedom, and will help you take the next steps towards financial security. And best of all, the service is completely free. That's right, you will never have to pay to speak with one of our advisors or to simply ask a question. To get started, schedule a 100% free consultation with one of our advisors right now online by going to ftmdaily.com/CFAN. That's CFAN. ftmdaily.com/CFAN. Get retirement help and the best life insurance rates from like-minded professionals who are waiting to assist you by contacting the Christian Financial Advisor Network. Log on right now to ftmdaily.com/CFAN and get your financial questions answered today. Friends, let 2015 be the year that you begin your journey towards financial security for both you and your family. That's ftmdaily.com/CFAN.
Are you prepared for the next stock market crash? It's not too late to protect yourself and your family with Jerry Robinson's best-selling book, Bankruptcy of Our Nation, now in a new audiobook format. Whether you want to listen in the car, at the gym, or on your iPad, we've got you covered. Get the entire 300-page book in audio format for only $24.95. That's over 12 hours of Jerry Robinson's economic wisdom, financial insights, and practical money-making strategies for only $24.95. Inside this new audiobook, you'll learn 21 profitable income streams you can create both now and in retirement, along with unique tips on how to inflation-proof your investment portfolio using our own PACE philosophy and our 5 levels of financial freedom, which is Jerry Robinson's personal blueprint for building true wealth. If your goal is to become a better investor, increase your income, or just understand what is really happening in the global economy, you cannot afford to miss out on the vital information that is jam-packed into this 12-hour audio book. Get instant access to Bankruptcy of Our Nation in audio format right now by going online to www.ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy. Download your copy today and get on the fast track to true wealth and a lifetime of financial security.
All right, friends, well, that brings us to the end of our program. Thank you again so much for choosing to allow us into your life each and every week right here on this broadcast. And as always, I leave you with this final word, this time taken from the book of Psalms, chapter 118, verse 8, where it says, "It is better to take refuge in the Lord than to trust in man." One thing that I've learned over the years is that men will let you down. Men will fail you. Men will hurt you. Men will disappoint you. But our God will never fail you. He'll never leave you. He'll never desert you. You can always put your faith, hope, and trust in Him, and you'll never be disappointed. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next Tuesday. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence.